Yeah.
Yael Tamar, what is the
Yeah.
biggest risk?
So there are many risks in real estate. I guess the top ones are market risk, then picking the wrong asset, and um, I would say liquidity risk because of the impending crisis or recession that's going to happen. Now, on the asset level and the market level, you can mitigate these risks with information, right? So you can look into market reports. You have plenty, CBRE, Colliers, the information is out there for you to show where they think market is going. There are credit agencies. There are all kinds of indicators, right? On the asset risk, I guess it's split in two. Number one is your due diligence, how much you know about these asset owners, asset managers, developers, and so on. So if you did your due diligence. And number two is basically if they're doing the right, if there's a right fit from the asset to the market, right? So if residential real estate is a big one in this area, or commercial, or so you kind of have to have real estate experience, right, to understand this. So if you're a savvy investor, this kind of comes natural to you. So there's a combination of market research and the market fit. So this is a market fit. So both of these things you kind of can solve because with more information and more experience. Now, the third type of risk, the liquidity risk, is much more problematic because ultimately what you have is forces that are beyond your control, like an impending crisis, or a or recession, or maybe there is a war breaking out all of a sudden in that country, or a hurricane or a tornado. There are many things that could happen, and insurance companies obviously are also aware of these, like force majeure, or maybe even trends. So with this in mind, we're talking to many real estate investors right now, and they're saying, well, we're not investing in development projects in certain areas that we see there's going to be a slowdown. So we're looking for either a quick flip or a yielding project in those areas. And it's understandable because they don't want to be tied in a property that's going to go down in value. Now, that's liquidity risk. Now, if we're solving partially, the liquidity problem in which, you can sell your property, you're probably not going to be able to sell it at a full price, obviously, because there's going to be less buyers, but you still have a possibility to recover some of your costs, or to get out before a certain time, which you deem more risky. So, and that's why we're in this business. We feel that the other types of risks can be solved, like I said, with more information and more data, which we provide to the maximum. And the liquidity risk we're mitigating through enabling trade of these assets.